How exactly are financial advisors like you navigating the current waters? Is there a real flight to safety right now, or is this a real buy the dip opportunity?
I think you're definitely seeing a flight to safety. I mean, you had the FANG stocks that shot up so fast and frankly led this whole market. You do have many companies who are trading cheaply that nobody even realizes right now. So I think there's going to be a big rotation out of, I don't want to say fully out of tech, but we're rotating from tech and large cap growth into more value names with companies who are growing earnings, growing dividends, and they're still going to be positive.
What types of names fit the bill for you in that, whether they be stocks or industries? Where are you finding that value within that value trade?
We start with earnings. Earnings, can they grow their dividends? Have the dividends been growing and have the earnings been growing? A lot of those names are in the value category. People forgot about value for 2-3 years now. And so we're looking large cap value, we're looking mid cap value, but something with a name where earnings matter. And earnings are going to matter more now than they ever have.
So does that mean in this current earnings season that somebody like you is scrutinizing the results very heavily? Because, I mean, the earnings growth has been very solid over the course of the past, arguably the past couple of years. So is this earnings growth environment going to continue to propel this bull market higher?
Without using too much of a cliche, but you got to show me the money now. I mean, it's been easy to grow earnings. The companies that are going to grow earnings for the next 2 quarters, next 3 quarters, into second quarter, third quarter next year, those are the companies we're super hot on.
Well, it's interesting you mention this, only because many of those value names are high dividend payers, like you said. Mm-hmm. In a rising rate environment, those dividends become relatively less attractive for utilities, telecommunication services companies. So is it fair to say right now that with yields near 7-year highs for the 10-year Treasury note, that there is actual competition for capital on the fixed income and perhaps even savings account and CD side of things?
Yeah, we haven't seen that competition, like you said, for 7 to 10 years. I mean, it's funny because people expected rates to rise. They've been talking about raising rates rising, but now when it's actually here, everyone's panicked. But there is definitely a competition. You're seeing CDs 220 for 1-year CD. We haven't seen that in years. And I think that is driving the flight to safety.
What exactly is what are the biggest questions that your clients have? Because you service high net worth and ultra high net worth clients. What exactly is worrying them right now? When you get the phone call, what are they asking?
It's funny, right now, there's a lot of headline news, a lot of headline risk, a lot of global risk. You're seeing, whether it's the tariff wars, whether it's the news out of Saudi Arabia, people need to refocus on actual markets and actual fundamentals. Our clients are asking a lot about the surface stuff, a lot about trade wars, a lot about anything that's going on that's really not related to the fundamentals.
What is the biggest risk out there in your mind?
Biggest risk is we don't figure this out with China. I think we will. I think you won't see this going past the elections. But I think that's the biggest risk. And then also, I think earnings. I mean, if earnings don't come in and growth becomes super stagnant, that's a risk. Those are the 2 biggest risks to the market.
Well, we've been talking a lot about those risks. Just if you talk about taxes, you got to figure your client base is pretty focused on those. Mm-hmm. Is there a sense from your client base that they are still optimistic about the current tax environment that we're in? Do they think that it's going to go away? Do they think that the benefits all been accrued now and that it's not going to accrue later on down the line? What is the view on the tax side of things?
You bring up a very good point. People haven't focused on that yet. That's a huge plus for the future growth of the economy. And everyone forgot about it. It happened. The tax bill went through. And then now we moved on. We haven't seen the benefits of that yet. And I think you'll start to see the benefits of that first quarter through fourth quarter next year. And that's why we're positive on the economy, on the market growth, well into next year.